Thank you for attending this discussion on retirement asset funding. My name is Larry Carnell. Many industry professionals know me as the guy that helped to introduce this program to the very first franchise, the very first business acquisition decades ago. My background's accounting and finance. I'm a former recipient of an Entrepreneur of the Year award, and I've helped probably thousands of people buy, sell, fund, exit businesses. Much of my expertise is lecturing across the country, even training accountants and attorneys on how to properly use this program to avoid operational issues and to ensure the benefits of this program to help you and your family long term. The primary strategy is not just to fund a business, but how to strategically use this program to help you accumulate, accelerate, protect wealth, and mitigate taxes. You know, as an entrepreneur, I'll tell you, in this new economy, it's not how much wealth you accumulate in life, it's how much you keep. And unfortunately, things are moving in the direction to go after people who make money, to take that money away from them. So the discussion of this presentation is going to focus primarily on the benefits of the RAP or Roth Advantage Plan versus the R.O.B.S program or rollovers for business startups, and how to use this resource in an environment of rising taxes and a dramatic rise in liability risk to help you better keep the wealth for you, your family, and your children. Now, the original first generation retirement asset funding program, now referred to as R.O.B.S, was first introduced to the existing business owners back in the 1980s, and it quickly became an innovative resource to help people fund businesses. However, changes in the economy, rising taxes, and a dramatic erosion of wealth and record bankruptcy rates due to healthcare has motivated the creation of a second generation product that I believe is the RAP. This program is specifically designed to help address changes over the last few decades and prospective changes in the future to help you, yourself, your spouse, and your family. And more importantly, is proven to do so by being preferred up to 4-to-1 over traditional R.O.B.S program. While there is no perfect product, each product has certain features, benefits, and limitations. So it creates the importance of talking to an expert rather than simply a finance company trying to sell you funding, to talk to somebody like myself that looks at the end game. It's very important. One of the biggest problems I find with 95% of people that I help exit their business is most of them were so focused on funding their business, they weren't thinking about their exit strategy. I, on the other hand, look at the beginning, the middle, and the end. And ultimately, even beyond the end, past your life, how do you protect this wealth for your children? So both the R.O.B.S and the RAP are penalty-free programs. They are also debt-free programs that allow you to use these resources as a down payment and combined with other bank financing, such as SBA loans. It's important to note that this is not a loan. This is an investment, very similar to what you may be currently doing with your current retirement plan. Many of us have worked for companies where we could literally take part of our retirement funds and invest them into buying stock for the company that we work for. The same thing is happening with this program. You're literally purchasing stock in the company that you own and operate, allowing that business to grow. We'll illustrate how that works and what the differentials are here via this slide. Now, this program or this slide will illustrate how both the R.O.B.S and RAPs work. Keep in mind, a primary differential is the R.O.B.S program is specifically focused on pre-tax money. The RAP is a Roth Advantage Plan or Roth vehicle. The way this happens is you first have to structure a corporation with a company retirement plan. Now, there are many types of retirement plans. You're most familiar with 401ks and IRAs, but there are a half a dozen or more other types of plans and dozens of other combination of plans to allow you to build protected wealth in a retirement plan. Rather than using a simple 401k, which can create what's now referred to as a 401k mousetrap, we create customized programs to help you accumulate, accelerate, protect wealth, but most importantly, mitigate taxes better than many other types of plans. Surprisingly, 95% of Americans don't have access to many of these plans, but we'll show you how to get access to that. Now, once that is done, once the company adopts this new company retirement plan, we roll your past retirement plan assets into this new company plan. Once the money is there, you then can purchase stock in your own company. That money ends up in your corporate checking account, and then in return, the corporation gives the retirement plan stock in your corporation or stock in your retirement plan. Now, that corporation can then use that money for any legitimate business expense, furniture, fixtures. You can even use that money to pay yourself a salary. Now, the big question is, why the differentials? What are the primary motivations to have a RAP versus a traditional ROBS program? Well, there's several. First of all, the RAP again is a Roth vehicle, and it requires you can set these things up with no retirement funds whatsoever. So if one of you or your spouse has a concern about using retirement funds, you can literally use a minimum of $10,000 in cash to create a vehicle to allow you to have access to these benefits. The big issue is this program, because it creates a Roth, it literally grows tax-free. So as the value of the company grows, so does that stock and the value of your retirement plan. Now, the exciting part is, let's say you invested $100,000 into your company. The business does well, it ends up being worth $1 million. Normally, when you sell a business, that business would be instantly subject to capital gains tax. As many of you know, capital gains tax, politicians are trying to dramatically raise capital gains tax as much as doubling those taxes. With this program, you're exempted from capital gains tax, and when the money goes into the plan, it continues to grow tax-free. Now, unlike a ROBS, when the money comes out of a ROBS, that money is taxable at whatever the future tax rate politicians decide to set. But with this program, 100% of that gain is tax-free. You, your spouse, and your children get that money 100% tax-free, exempted from not only capital gains tax, federal tax, but also state income tax. Now, the other appeal to this program is wealth protection. Traditional retirement plans are only protected to you're about 72 years of age, at which time the federal government says you deferred the taxes long enough. Now you instantly have to pay those taxes at whatever tax rates the politicians decide to have at the time that you're forced to take that money out. With this program, there is never any required minimum distribution. Roth retirement plans are never subject to required minimum distributions. If you live to be 100 years of age, that wealth is protected beyond the grave. Now, the other issue is my concern is at 72 years of age, that's when you're entering the time of your life where you're at the highest potential risk of having serious healthcare related issues. This is the reason bankruptcy rates have skyrocketed from 20 some odd percent up to 67%, and they're continuing to escalate. Because of advancements in medicine, people are living longer, but the problem is they're not being reimbursed to recover. Now, the last years of your life, you're often at home under home care. None of that is covered by hospitalization insurance, and that can devastate the surviving spouse's wealth. In America, husbands like us are typically 2 years older than our spouses, but women outlive us by 5 years. So there's a 7-year differential between the passing of the husband and the passing of the wife. So if something happens to us, we want to make sure that that wealth we've accumulated over decades of our life doesn't go to some creditor. Here's a great way to protect your spouse and your family. Now, children in particular, according to payscale.com, children are often at their peak income and their peak tax rates when the parents pass away. If they inherit $1 million from a traditional retirement plan, you've literally pushed the kids into often the highest tax bracket. They could lose 40 to 50% of their inheritance just like that. Roth retirement plans bypass creditors, bypass federal tax collectors, state tax collectors. The money goes directly to the children. Your children are going to love you. they'll literally end up with twice the net inheritance. Now, if you thought that was good, now let's talk about something that's going to mean a lot of money. Not when you sell the business sometime in retirement, but right now, right after the business is up and running and you start becoming profitable. Historically, as you make more money, you push yourself up into these 30–40% tax brackets. The problem is when that happens, that money is taxed at whatever prevailing tax rate. Keep in mind, you also have to pay payroll tax. So you could lose 45–50% of your money. So the net proceeds would then go into an unprotected checking or savings account exposed to creditors, and any appreciation of that money is taxable. Conversely, we're going to show you how to take the money out, reduce your taxes literally by as much as 40%. And that money, rather than going into an unprotected checking or savings account, is going to go into a federally protected retirement plan and grow tax-free. But there's many other advantages to the program. If you'd like to learn more, give me a call direct, 770-652-5393, or send me a text message with your name, phone number, and email address. I'll send you a cover story article that talked about this program, as well as other materials that will help you understand how the program works. I'll also send you a link to my calendar that will allow you to instantly schedule a one-on-one conversation to help you understand whether either of these programs or other options would be best fit for you, your spouse, and your family. But go to LinkedIn, review my credentials, scroll down to the bottom, see what hundreds of industry professionals say about working with me. And I will encourage you, if you want to become a successful entrepreneur, you've got to act like a professional entrepreneur. Partner with experts, help you avoid costly mistakes, and I look forward to helping you get there. Appreciate the time that you spent, and let's help you live that American dream of owning your own business. Thank you so much for your time.